Now let's take a look at the bigger picture and get some of these stock picks too. Greg Fields, investment advisor representative at Gerber Kawasaki Wealth and Investment Management. Great to see you, Greg. What did you make of the sell-off this morning? Is this a real worry? Is October the spooky month that it's always set up to be?
Right. Good morning, Nicole. So, there are definitely forces that are weighing on the markets right now, forces of uncertainty. We're seeing some of these numbers show up from the tariffs and the U.S.-China trade war very negatively. We're seeing Brexit, the economic slowdown in Europe, and also conflict in the Middle East. So all these things are, while the market's been great, these are probably going to put a bit of a damper on the market rising from here.
It's interesting because some of the economic reports that have come in have shown this weakness, and that stocks are still, I was just looking, the S&P and the Dow are about 1.6% from their record closes of July. Right. There just seems to be this disconnect, but I think people are looking more long-term and truly believing in USA, in the consumer, in the economy, and they're keeping their investments alive. Is that what you recommend?
Yeah, absolutely. We're a long-term investment shop. We encourage people to, hold. We make adjustments, but we're not trying to time the market. It's not about, timing. It's time in the market. So, we tell people not to have knee-jerk reactions to these headlines.
So I saw that in the notes that you also had some names that you liked, which I thought was interesting. We just touched on Apple, so let's start with that because I'd love to get your thoughts. I mean, obviously, new great products. There are some thoughts that maybe they're going to wait on 5G, some folks, but I think the 11's been received well, right?
Oh, absolutely. I actually bought 2 iPhone 11s over the weekend. And I really like them. I think every step they've taken has been, really amazing. Apple is kind of the center of our ESG or socially responsible investment program here. And the reason we like Apple is what you're mentioning already is that while they may not be a revolutionary company, they're more evolutionary at this point, they're still dominating the handset market, right? So between Q1 and Q2, they actually increased market share from wireless handsets 8%. Those are good numbers. But, what we really like about them from an ESG perspective is the fact that, they incorporate their social values into their brand in a way that benefits investors. Tim Cook is a gay CEO, probably the first openly gay CEO of a company this big, which sets a great example for inclusion and fairness. It's just, it's been an amazing company. And in addition to not getting mired in kind of the privacy struggles in politics in DC, like some of these other technology companies, privacy has always been a cornerstone of their business. And it's a real differentiator for them. So, for all those reasons, we think, Apple's a great company. It's also performed really well.
Yeah, those are all good. Those are all good reasons, all good things. What about a name like Tesla? Because I know that your firm has been hot on Tesla for a long time, Ross Gerber. So what do you think, Greg? I mean, you guys like Tesla still?
No, we do. It's more of a long-term play. But look, when it comes to Tesla, nobody's got Tesla's game when it comes to mass-producing EVs. Nobody's matched them in terms of just technology and safety. And they've got this amazing partnership now with the Chinese government. China's got a terrible pollution problem. Tesla's offering this very elegant solution. So it's been a great mutually beneficial relationship. And for that reason, they're sort of front and center of our ESG portfolios because they're having a direct positive impact on the environment.
What do you think about the next set of deliveries? I mean, people have been talking about 95 to 100,000. Do you think they can meet some of these exciting targets?
We think that they can. We think that they've gotten a lot of their sort of management issues straightened out. The factory in China is on schedule, on time. It's just running as a much tighter ship than it was even a few months ago.
Right. Yeah. I mean, and its competitor, NIO, obviously has had a tough time. What will derail Tesla from what you say is your goal. Do you have a price target that you think it's going to reach?
You know, we don't at this point. I don't really see a whole lot of negative consequences for Tesla in the near future anyway. It doesn't have any competitors, and that's like the best place to be.
Right. NEE, Nextera. What do you think about that one? I know you like that one, right, Greg?
Yeah, it's a little bit expensive right now, but we've been buying it for the last year for our clients. It's performed really well. This is, the ticker is NEE. It's actually an alternative energy utility. They're based in Florida. They've done an amazing job. They have a great management team that's gone in and bought these sort of old line utilities, completely reinvented them, made them profitable. They made, wind and solar profitable when people said it couldn't be done. Just in the second quarter this year, their profits were up 13% year over year. And their earnings are projected to grow 6 to 8% over the next 2 years. I mean, this is a utility. That's kind of remarkable.
Right. Great to see you, Greg. Thank you so much. Greg Fields, investment advisor representative at Gerber Kawasaki Wealth and Investment Management.